Hello and welcome to Acclime's podcast series, Advancing Vietnam, with me, Vlad Savin, as your host. In this episode, I'm discussing with Matthew Lourey, managing partner at Acclime Vietnam, about the IFRS implementation in Vietnam, key differences between the IFRS and the Vietnamese accounting standards, and key steps for investors to take action now in order to be prepared for the 2025 compulsory switch to IFRS for the majority of the businesses operating in Vietnam. Matthew, welcome again to our new Advancing Vietnam podcast series.
Great to be here as always, Vlad.
Interesting topic. We talked a lot about the IFRS and the 2025 timeline is approaching much faster than investors would assume.
And I think it's going to be very topical, so get used to it. It's going to be one of the most important things to talk about in the industry.
To meet the needs of international integration and cross-border investment diversification, updating Vietnam's accounting policies to be closer to the international standard has become an urgent priority for Vietnam. That's why in 2020 March, the Ministry of Finance issued Decision 345 approving the project application of financial reporting standards in Vietnam, aiming to apply the IFRS and the new Vietnamese financial reporting standard, VFRS, towards IFRS from 2025. Before breaking down this timeline and deadline of the practical notes for investors, let's go through the basics first. Let's look at IFRS. What does it really mean in practice, and why is it fundamentally different than the current system, the VAS, Vietnamese accounting system?
So I'll start that with VAS. So Vietnamese accounting standards are a rules-based, tax-driven accounting system. So we've got around, I think it's 26 standards, haven't been updated for years. It really is based on documentation and a set of rules. They don't reflect the underlying performance of a business. They are there for control, and they're there for compliance purposes, fundamentally. There's a whole range of reasons. So they're relatively simple in a mature business international environment. They're very rules-based, and they're very prescriptive in how they must be applied. You don't have discretion. IFRS is a principles-based system. So we have 40 plus 16, almost 60 for the current and legacy standards. It keeps developing and evolving, and it's based upon, as I said, principles. So you're looking at comparability, transparentability, and comparability. So that consistency, being able to compare, being able to understand the fundamentals of what's happening in a business, and have flexibility to reflect what's going on, yet constantly changing the implementation of the rules to stay up to date with changing international practices, changing financial tools, and having the last part of the key difference is that flexibility in how you report relevant to the business, so that businesses in a certain sector are not disadvantaged by the way the rules work, because its principles allow them to have that flexibility. There are some significant underlying differences though. Just to compare the two, one of the significant differences is looking at mark-to-market revaluations or looking at impairment, whereby in VAS your depreciation, you're based on cost, and there's a strict rules, versus IFRS, you are looking at values, you're looking at impairment, and you are looking at future values. So you've got a revaluation up or down. Assets will reflect their true value in a balance sheet. Vietnamese will reflect historical cost, depreciated historical cost in a balance sheet. And that can have a gigantic difference over time in performance and balance sheets and liabilities.
Mm-hmm. And to understand a bit the potential difficulties of switching from VAS to IFRS, can you share a bit from a historical perspective, since you mentioned before, what is really the source of the VAS? How was it created? We talked about this with the investors all the time to help them understand the complexity of the system.
And it is complicated, because I want my financial statements internationally in a certain way. Why can't I have them in Vietnam? Why do I have to go through a double step? And it's a good point, because historically it's come from a tax-driven adjusted cash system. It is, if you don't have a receipt, it's not in the system. Not technically, but that's part of the fundamentals. It's date-driven, it's tax compliance-driven. Your annual financial audit is a tax compliance measure. So it's driven from these trying to maintain a system of tax compliance and a set of rules to audit for a compliance-based, not performance-based. And that's the difference, where many countries will run a separate, your financial reporting system, IFRS, or local variation, will be distinctly different from your tax system. In Vietnam, it's integrated as one. And that rules-based, document-based, process-based of where you must do your journals, which accountant journal must go to, etc., is written in those rules about compliance, not about performance.
And what are some of the key benefits of IFRS, and how will these actually translate in practice for the Vietnamese businesses here? This change make their life easier in principle, or it'll become cumbersome for the next few years for them to really integrate?
I think a bit of everything there you mentioned is it's going to be cumbersome and it's going to be a major shift, and we can talk about that later because I think that's a separate topic. Benefits are that international trustworthiness. We see in local investors, one of the biggest fails on getting foreign investors to help expand or to go abroad is lack of reliability of financial information, because of those rule-based information does not give full picture. In fact, a lot of Vietnamese businesses will have two sets of books, one for VAS compliance and one the reality. And IFRS seeks to move past that and says, oh, here's the reality, then adjust for tax. That's sort of a different approach. But what it will do is reflect the true nature of a business. The performance can be measured against peers in other countries. Before your bank can look at your balance sheet and look at the true liabilities you have. If you have proper liabilities are greater than they may be under VAS because of the principles, or more likely the assets have a higher value. And just to give a simple example, in Vietnam, when you're looking at stock, raw materials, it's first in, first out. You have no choice what to use. Versus you can do weighted average cost. You can do, and then you must do a test. So that may have a difference in what it is. But then at the end of the year, Vietnam, it's first in, first out. That's it. You've recorded it, unless you've lost it. In principle, what if they've gone down in value significantly? So this idea of, of lower of cost, carrying at lower of cost and net realizable value, looking at impairment, what's my true value? The stock may be worth a lot less. So banks can be far more, if your lenders rely on, say, the value of your stock, I can trust. At the moment, there's a value, but can you trust that? So you're building in a lot more competency into the system and a lot more confidence and reliability in what the data is. The last part is, as I said, two books. Now, the IFRS or the VFRS will give you a fairly comprehensive understanding of how your business is performing based on business norms, as opposed to doing a set for tax purposes, then actually having to separately do performance-based accounting, measurement, tracking, which is a cost. So there's going to be, just on those simple examples, quite a few benefits going forward, and some may argue that it's change for change's sake. It's been a long time coming.
Mm-hmm. Let's discuss then the practical and the mandatory timeline for this implementation from the government. So we have three stages of this implementation, and we're already in stage 2, moving towards the last one. First, it was about building guidelines and training. That was the first stage. Then from 2022 up to 2025, it's pilot implementation with consolidated financial statements for selected company by the Ministry of Finance, looking at listed companies, state-owned enterprises, large-scale unlisted companies, and also volunteer FDIs. And then 2025 is the compulsory implementation. What are we now, and what should the investor expect from these stages here moving forward?
So just to make it clear, the compulsory is, the way the wording is after 2025. So it's likely going to be compulsory beyond that, but the reality is of having to get there by the 2025 deadline is just the way it's working. So the roadmap itself was ambitious. We've had previous roadmaps before, or statements of what we're trying to do, but this time we had the force of the law behind it and not just a wish list. I think we've been hampered by COVID, did hamper that. I don't think the stage 1 is as far as long as they wanted before stage 2, but the good thing is that stage 2, I believe, is still basically on track in the voluntary stage, in the IFRS implementation, because the international business community wants this. The international business community is preparing, there's training happening on, we're doing awareness and training sessions. The firms are now into that stage to international businesses. Once you start, this is not going to stop. So the international community is not waiting for the authorities and the accounting bodies to really push things domestically. They're doing it themselves. Professional advisors that do it. The society is going to bring this along because it's a long time. Vietnam's one of the few countries that's not partly or fully integrated into that international financial reporting process, and as a result, there's a lot of push to make this happen, even if the timeline is not completely strict. So we had that first stage, which was developing the process. Second stage is the voluntary implementation of the pure IFRS, and that allows adjusting of the VFRS, because it's the adjusted Vietnamese process for those who don't use IFRS, that we can talk about that in a moment, and trying to fine tune how that's going to work and the tax implications and that process. So it's in progress, and I'm hopeful that that 2025 timeline isn't extended. It's possible because there's a significant amount of training from the Vietnamese accounting local, the bulk of the accounting staff and the community out there. But let's hope we can still get there. I still think it's on track.
Mm-hmm. And you mentioned the VFRS. Which companies, which businesses will need to switch to the VFRS, and when, and what does it really mean comparing with the IFRS?
So you've got three levels. You've got those who use IFRS, those using VFRS, and those exempt, which are micro businesses. So micro businesses less than 10 staff, I think is the main criteria, will be exempt. And as they are now, they're effectively exempt from VAS anyway. It's an implied tax, and so there's no significant change. So VFRS is everyone who's not IFRS. IFRS are foreign companies, listed companies, foreign invested listed companies, those with foreign funding, and a few other criteria. So the bulk of Vietnamese community will be VFRS, which will be localized versions of IFRS. As I said, the current Vietnamese accounting standards have not been updated for many, many years. There's so many elements that are not covered. So they basically got to a point and it stopped being changed because they knew they needed to move to IFRS-based system. The plan with VFRS it's constantly updated, it's aligned, it's localized, so there will be differences. And as new IFRS standards are released, the process is that new VFRS standards will follow immediately thereafter and localized. So we're now on a comparable track. So whether there's pure IFRS or adjusted, like most countries, those adjustments and those changes will vary to make sure that there's subtle differences that are going through.
Mm-hmm. And what is the deadline in practice for investors in Vietnam when looking at that 2025? Because in order to go live in January 2025 with IFRS adoption, they will need to plan, train, adapt their technical resources, so on and so forth, human capabilities much earlier than that. What is that practical next deadline to meet the 2025 for investors?
So if you're looking from a corporate perspective, it's an interesting one. So if you're wanting to adopt 2025 IFRS, you need 2025 numbers, fully audited, completed, compliant. You need 2024 numbers, so you need to be following and making sure you're following the IFRS. But the trick is you will need opening balance from 2024, which means you need closing balance 2023. So it's a 3-year process to do it properly. Anything else is going to be difficult, not impossible, but a really difficult journey if you're starting in 2025 to say, this year let's do full IFRS reporting. Now, that's not to say you can't. The problem is if you, for example, don't do an IFRS based stock, as an example, stock take / valuation / process at the end of 2023 for opening for 2024, you may not be able to prove, or cash counts or something like that. Let's say there's a particular process and you get a qualified audit opinion. What does that affect with your financial situation? So there is a lot of things to think about whether you can do it at the last minute or whether you have to do that 3-year roadmap. Mm-hmm. And that's from a corporate. But there's a second part about that, and I think you're alluding to, is that the staff resources. Everyone needs to be aware there's a training. If your staff have done ACCA, Australian CPA, etc., they've probably got a fairly good grasp of IFRS. If your staff have a chief accountant certificate and they're the key person, there's no ongoing compulsory training education. There's no 40 hours a year CPD or anything like that for a chief accountant certificate holder. It's a one-off certification, it's not a qualification. Therefore, you must make sure that they are involved in the MOF Ministry of Finance training, the VACPA training, whichever is available, and third-party corporate training to make sure they are aware, because you don't want to screw this up, to put it bluntly, because this is compulsory. That move isn't an optional for the vast majority and reliance on untrained staff. Mindset-wise, this is going to be a big change, like really big change.
Going up to that topic, exactly looking at mindset and challenges, where do you see the gaps and the critical issues arising in this process? You mentioned some of them. What about the software? What about the tax compliance issues? Because there's key differences there where tax reporting meets with the new IFRS, and because it was linked with VAS, how does the tax law adjust?
And the tax one's a really interesting one. I haven't seen the full tax General Department of Taxation's plan or roadmap for that, because obviously it's going to be linked to the VFRS, and that's why Vietnam Financial Reporting Standards will become linked to IFRS. But those who are doing pure IFRS, it'll be interesting about to what extent they need a second set of adjusted accounts or how that's going to work, because until now, it has been completely based on your accounting system is a tax system, and that's not the case with IFRS and VFRS. So that is still unclear, and we'll need to get guidance, and that's why we have a timeline for the tax authorities. I understand they're building and working through. You'll see what that means. That does bring us to we need international style accounting software, where the current accounting software is very much, that is used by the bulk of Vietnamese businesses, is very much driven by rules, not principles. And there's a lot of software out there. And language is going to be one thing. You can't just take foreign software and use it, because there still will be a Vietnamese language requirement for documentation and records, and that's built into the expectations of whatever we do. But there's going to be a need to look at software, whether it can be used, whether it follows principles, or whether it's too rules-based, and how we can change and what's available. That's going to be a whole process. And whether we run an IFRS or VFRS and then a tax adjustment, that's very different. But to move back to staffing, the training and education at university and your chief accountant qualifications, your bookkeeping, everything's based on rules. And to move to a principles-based system, that you need to have internal standards and internal interpretations and applications, and your documentation supports your application of the principles, it's going to be significant, and a lot of people aren't going to cope very well without support, without company training, and without a lot of internal roadmaps and planning to make that happen.
Especially within the Vietnamese regulatory culture, which is focused specifically on rules, on what is written, and the responsibility for taking action on those specific rules. And when it's about the principle, then the responsibility gets diffused.
And one of the biggest gaps we see, or the biggest exposures we see anywhere in the world when we go a change in tax and accounting systems, is that changeover. So that changeover period and the inspection of that, and the ability to make a significant error on that conversion, is where it's going to expose companies, and that's going to give the tax authorities an inspection point where they will go up. How did you do your conversion? And that's a double bite. You did it wrong bringing it to one set, you did it wrong coming off the other. That's going to be something we see that causes issues in other jurisdictions. That will definitely happen in Vietnam. So the planning on how to implement, and that crossover, the cut-off, the training, all of those things are going to be key. And to do that, it's not something that you start in 2025. It's something that you need to start planning, thinking about now, and resource development and third-party training. And it's a journey that needs to start earlier rather than later. Even though it sounds like a later problem, it is a now problem, hence that roadmap and why it is in place.
And you mentioned before software. We know already that companies in Vietnam need to use VAS compliant software systems. How would that translate into VFRS, for example? Do you expect that those will be specific approved by the government software components that the companies can use, or they can just take Microsoft, for example?
It's going to be an interesting one where zero is a common one in the region, which can't be technically compliant in Vietnam because it can't meet language requirements. It doesn't have the pure requirements for entries and account setup that is required under the accounting laws. People use it, and then they will do a manual system. So there's a push to use that sort of foreign system and international approach. But as you say, the local ones, we don't yet know whether we're going to see some level of prescriptive reporting based on VFRS that will need to be followed. And the reason I say, even though indication would be, of course, that's what happens now, of course there'd be prescriptive reporting, given that a number of companies listed, international funded, government agencies, foreign invested, can use IFRS and not VFRS. And IFRS doesn't have a set of prescriptive, whether that's in the accounting standards or whether the prescriptive reporting is a separate tax filings, and that's an add-on. So we do see in some countries your accounting software is different. So you'll do your tax software on the tax office system. You'll take your IFRS or your own accounting system that you use, which is relatively not prescribed. You get to do this in a number of ways, and then you are updating the relevant parts into the tax office software so that you've got consistency. That may be a model, and we haven't seen that. I personally haven't seen that, and I think that'll be interesting how that works, because I'd love to see the flexibility on accounting software. I think it will give so much more freedom for companies to really manage and look after and grow the business. But that's going to be a cultural shift that's going to be really difficult for the vast majority of accounting professionals across the country. So which path we go down is still something that we need to keep an eye out in coming months.
And that will also mean adjustments within the tax law as well.
Oh no, significant adjustment to the tax law. So tax principles won't change. Accounting principles change dramatically, and therefore the interaction is where we're going to look at how the interaction works and what the final process for that will be. And that again is a significant mindset shift, if not a practical shift, that businesses need to deal with.
Mm-hmm. All right, then. And final question, in practical mindset for investors now, what key steps should they take at this moment? How should they prepare on a step-by-step basis towards the 2025 implementation?
And they need to start a working committee now. It's an internal committee to understand what does that mean for that business, because particularly a lot of our clients are almost all foreign investors. That's an IFRS model. They're all pretty much need to go to a full IFRS. That's a great thing for them because internationally, that now we can consolidate as part of international without having to restate. So it's a great thing. In that context, it's not a bad thing, but it's going to take a lot of work to understand what differences they have and how that applies and how they're going to use it, and the training and the skills required, the software, the databases, the documentation. And it's a journey to start now, because we want to have, if they're going to be implementing in 2025, we want to have 2023 IFRS compatible processes being done, and we've got to make sure that the audits that are done at the end of 2023 are compliant and will not result in qualified opinions or etc. moving forward. So it's a this year problem. So it's a 2023 problem. Start with the working group, look at differences, look at resources, look at training, look at staff, and start that journey now, knowing that you need to have a significant path done in 2023 so you're not exposed. Mm-hmm. So it's not a 2024, it's not a 2025, it's starting 23. It's not full implementation, but if you don't have that understanding, you will be in trouble in the future.
Mm-hmm. Thank you, Matthew, for these practical insights, and hopefully investors got the main point of really focusing on IFRS, because it's coming, it's confirmed, and it's going to be compulsory.
Fantastic, great talk, and I look forward to seeing how this transpires, particularly this year, but as we move toward 2025.
As the Vietnamese authorities are working in the background and preparing for the 2025 IFRS implementation, we strongly advise international investors to take action and start planning for IFRS now, so that they will not be at risk at a later stage. A deep practical understanding about VAS and IFRS is essential to be able to properly assess resources, software, human capital capabilities, training, and other requirements needed to perform these changes. And many thanks to you, our listeners, for tuning in to Advancing Vietnam podcast series. For more information about this topic, please check out our publications on vietnam.acclime.com. And if you want to reach out to us for any additional details, feel free to contact me on LinkedIn or throughout the website contact details.